Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now the US dollar is crashing, which is big news for Bitcoin and crypto. And on top of that, Ethereum is now perfectly playing out the trade that I've mentioned in my last few videos, which I'll talk about later in the video, so definitely stick around. First of all, we need to talk about the US dollar index, also known as the DXY. This is on the daily time frame, and what we've seen over the last one day is actually a large dump in the DXY, which is essentially a dump in the value of the US dollar relative to other fiat currencies. And if you were watching my videos around 1 month ago here on the channel, I was talking about this bearish divergence in the DXY chart on the daily time frame, talking about the possibility of a pullback here in the DXY, which is actually bullish for Bitcoin and crypto. And not only is this bearish divergence now playing out in the DXY, once again, over the last one day, we have seen a dump in the DXY, and more importantly, we've seen a dump and a daily candle close below this important technical level on the chart, which was previous important resistance and recently was acting as support. And once again, this is now broken. And that level on the chart was sitting at around 105.6 to 105.7 approximately. And once again, over the last one day, we have now seen a daily candle close below that important technical level, technically confirming a break to the downside. And so obviously, this is a bearish confirmation signal for the DXY on the daily time frame, which once again is a bullish signal for Bitcoin and crypto. Because if you're taking a look at this chart right here, this is still on the daily time frame, looking at the price of Bitcoin in the candlesticks, and this red line right here shows the DXY or US dollar index on the same time frame. And as we can see, almost every time where the DXY is dumping or in a downtrend, that is usually bullish for Bitcoin, as we can see, and vice versa. If the DXY is bullish, usually that means that is bearish for Bitcoin. And now, obviously, it is not a perfect inverse correlation, not a perfect negative correlation. For example, there's some times where these two are moving in the same direction, but the vast majority of the time, the Bitcoin price and really the overall crypto market is moving in the opposite direction to what the DXY is doing. And once again, the DXY pretty much reversed from bullish back to bearish towards the beginning of October when I talked about that bearish divergence here in the DXY on the daily time frame. And ever since then, ever since the beginning of October, obviously we've seen pretty much nothing but bullish price action here in the price of Bitcoin and really the overall crypto market. And so now seeing this dump in the DXY below this critical level on the chart, confirming the bearish direction in the DXY, once again, this is technically a major bullish signal for Bitcoin and the overall crypto market that we need to consider. And so simply based on the DXY dumping to the downside, once again, this is now telling us that it's likely we could actually continue this bullish trend in the price of Bitcoin, and once again, for the majority of the crypto markets as well. And now, of course, if you're zooming out to the weekly Bitcoin chart, we still have this important area of resistance sitting in between around 36,000 to 38,000, which is where the price can struggle at. And we've actually seen a perfect rejection from 36,000 over the last few days. And just looking at this daily Bitcoin chart, of course, as I mentioned in my last video here on the channel, we now technically have a bearish divergence here in the price of Bitcoin on the daily time frame. And so technically speaking, this bearish divergence for Bitcoin means we're due to see some sort of pause or setback for the bullish trend. But of course, now that we have that dump in the DXY telling us we could see another move to the upside for the price of Bitcoin, it's possible we could end up seeing something like what we saw around the beginning of July. Obviously, we formed an initial bearish divergence if you're looking at the beginning of July right here. And over the next few days, we saw a slight pullback and then some choppy sideways price action over the next few days after that. And then what we saw roughly 1 to 2 weeks after the initial bearish divergence confirmed was actually another leg to the upside, forming a slightly higher high, which basically formed a new bearish divergence, a larger bearish divergence, because the RSI at that stage on the daily time frame was still in lower highs. And so that is a possibility we need to consider, where technically, yes, we have a bearish divergence right now, but we could end up forming a new higher high in the coming weeks, forming an even larger bearish divergence here on the daily chart. And in fact, if you're looking at the daily Bitcoin MACD, right now this is looking extremely similar to what we saw back here towards the end of June entering into early July, because once again, back then we saw declining bullish momentum here in the histogram within the MACD indicator, indicator, just like what we've seen recently. And in fact, right now it's getting very close to a bearish cross like what we saw back then near the beginning of July. But once again, even after that bearish cross here in the daily Bitcoin MACD at the beginning of July, we still ended up forming a slightly higher high in the price of Bitcoin. One more pump to the upside before then we saw a bit more of a pullback. So this is definitely something interesting to keep in mind. Once again, the daily Bitcoin price oscillators are starting to look a little bit more bearish, but have not fully confirmed a bearish trend reversal or anything like that. But once again, the DXY is telling us we could potentially see another move to the upside, potentially extending this bearish divergence for the price of Bitcoin. And if you're zooming into the shorter term, looking at the 8-hour Bitcoin chart, right now the price of Bitcoin is technically within more of a shorter term ascending parallel channel, which is technically a short-term bullish trend. And in case you're wondering, this ascending line of support is currently sitting at around 34.4k to 34.5k, and this line of resistance is sitting at around 35.7k. And so at least for now, while the price of Bitcoin is still in this ascending parallel channel, forming higher lows and higher highs, once again, technically speaking, we have not confirmed any bearish trend as of right now. Higher lows and higher highs still means we are trending in the bullish direction. And in fact, if you're looking at the 6-hour Bitcoin chart, we can see a new hidden bullish divergence, which has now confirmed with some initial candle closes in the green. And once again, this is something that I talked about in my last video as a possibility we need to consider. And now that we have higher lows confirmed in the price, while also confirming lower lows in the 6-hour Bitcoin RSI, once again, this is a hidden bullish divergence, meaning we're due to see either some slight bullish price action, if not some choppy sideways price action, as some of the most likely scenarios out of a hidden bullish divergence. And so essentially that bearish divergence on the daily time frame might not be done forming. We could end up seeing a new higher high. So that is something that we need to consider, because once again, not only is the DXY dumping, we also have this hidden bullish divergence now active on the 6-hour time frame. And this would only invalidate if we see a confirmed break back below this low just here, because in that case, we would either have to reconfirm a new hidden bullish divergence, or if we actually dump below this low, which is sitting at around 33.6k, then that would fully invalidate any possibility of a new hidden bullish divergence confirming. And so essentially for the Bitcoin bears out there, we would need to see a confirmed break back below around 33.6k in order to invalidate these short-term bullish patterns, and that would likely increase the probability of this bearish divergence on the daily time frame simply beginning to play out without needing to form any new higher high again. But at least for now, once again, in the short term, we are currently looking slightly more bullish than bearish. And if you're taking a look at the Bitcoin liquidations heat map based on the Binance BTC to USDT perpetuals futures contract, we can still see a decent amount of liquidations, a lot of liquidity sitting at approximately 33.9k, which the price over the last 1 day just missed. And so that is also something to pay attention to. Once again, if we end up breaking down here in the shorter term and invalidating this hidden bullish divergence, then in that case, upon a confirmed break to the downside in the price of Bitcoin in the short term, basically I'll be targeting towards around 33.9k as the next price target in the short term if we confirm the bearish scenario with a break to the downside. And once again, this ascending line of support is still sitting at around 34.4 to 34.5k here in the shorter term. But anyway, now getting into the Ethereum part of this video, this is on the 3-day ETH to US dollar chart, and over the last 1 day, not much has changed on this chart. So the breakout for the falling wedge is still active with an active price target at around 2.1k. And so if you're zooming into the daily time frame, of course, we still have this important area of resistance sitting in between around 1850 to 1890, which the price is basically running into right now. And so, of course, with the price currently sitting just below this resistance, it's still possible we could see some sort of rejection or struggle around this price range. But if we end up seeing a confirmed breakout back above around 1890, ideally back above 1.9k with daily candle closes back above that level, then in that case, the next important area of resistance on the daily time frame is sitting in between around $2,000 to 2030 based on these previous highs. And now if we do end up seeing another short-term rejection, then in that case, we also have this important area of support sitting in between around $7,000 1730 to 1750 based on previous resistance. And as for the daily Ethereum price oscillators, once again, as of right now, these have not confirmed any bearish reversal signals. They are still looking more bullish than bearish. But with that being said, once again, in the MACD, this has been showing declining bullish momentum over the last 1 week or so, meaning the bullish trend is basically slowing down, but we have not confirmed a bearish reversal. And staying on the daily time frame, of course, we still have an active broadening wedge pattern with an active breakout and price target, which is sitting at around 1980. And this only invalidates if we see a confirmed break back below around 1730. And if you're zooming into the shorter term, looking at the 4-hour ETH to US dollar chart, obviously over the last 1 day, we have seen a perfect bounce from this exact level of support, which was sitting at around 1780 to 1790. And in case you're wondering, this level of resistance is sitting at around 1860 to 1870 approximately. And once again, like I said in my last 2 videos here on the channel, we should be buying or looking for long positions around this level of support while the trend is still intact, because as the saying goes, the trend is your friend until the end, which means until we see a break to the downside below this support, we should be looking to either buy or enter long positions around this level of support. And so once again, like I said, around 2 days ago, in the middle of this pullback right here, we should be looking to enter a long position or to buy at around 1790 approximately. And once again, in my last video, I reconfirmed this analysis by saying, yeah, we should be looking to long or buy ETH at around 1790 right when we were bouncing from this level. And so obviously, if you watched my last 2 videos here on the channel and you followed this trade, right now you would be in massive profits. And now personally, with my long position right here that I entered all the way back down here, I am taking a small amount of profits off the table right now because the price is pretty close to this level of resistance. And personally, I've also moved my stop loss just above my entry price. So in the worst case scenario, I have taken some profits. And let's just say if we crash right now, that would exit me out of the trade at my stop loss, which is also slightly in profits. And so basically, if the price keeps pumping, I continue to profit, or if the price crashes right now, I would also automatically exit the trade in profits. It's a win-win scenario if you took this trade right now. But in case you missed my last 2 videos here on the channel and you missed this trade, of course, no worries. There's always new trades happening almost every day, every week. So there will be more opportunities, but right now would not necessarily be the level to enter a new long position, considering the risk to reward ratio is not what it was around 1 day ago. Because like I said in my last video here on the channel, when the price was back down here, of course, having a stop loss just below the point of invalidation, while the potential reward is a bounce all the way back up towards this resistance, that was a really good risk to reward ratio because there was quite a large reward and not much risk from this point down here. But of course, where we are right now, let's just say if I opened a new long position right here, there is a lot more risk of a reversal and not much reward left to go towards this resistance. So the risk to reward right here, once again, for a long position is not very good. But on the other hand, there is a potential short position opportunity coming up if we do end up running into this resistance and experience a rejection from this resistance at around 1860 to 1870, because essentially if history repeats, of course, that would be a decent short position. But remember, in a bullish trend, the long positions is really what are more profitable than the short positions in a bullish trend. And in case you're wondering where I take these trades, where I enter long positions and short positions, I usually trade over on Bybit, which I'll make sure to leave a link to Bybit in the description down below and in the pinned comment. And in fact, if you use that link down below, you can claim a massive deposit bonus. But unfortunately, there are some countries around the world where you cannot access Bybit due to regulations. And so if that's the case, if you're in one of those restricted areas, there is also Bitflex as a backup option, which is an exchange just like Bybit, but you do not need KYC. And so I'll make sure to leave a link to both Bybit and Bitflex in the description down below and in the pinned comment if you want to trade these moves like the price of ETH right here. And if you want to know how to make a lot of money in crypto, no matter if the price is going to the upside, to the downside, or simply chopping around sideways, you can make money in crypto by watching these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is bullish or bearish using AI, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.